India's growth story is one of the world's biggest investment opportunities. So how can investors capture it with discipline and outperformance over the decade ahead? A very warm welcome to Maganthan Siva, who's joining us from India Avenue, and Kenneth Andrade, who's from Old Bridge Capital, to unpack how the India 2030 Fund is investing in the growth story there and how Australian investors can position for it. Maganthan, great to see you as always. Thank you so much. And I think, just to preempt this, we'll answer quite a few questions that we've already had about ETFs. For Australian investors looking at India, what is the core purpose behind the 2030 Fund? And I suppose, how does it differ from buying just India exposure via an ETF?
Yeah, so that's a question right to the heart of it. We look at India, we think of a fantastic sea of opportunities given the growth, given the demographics. One way to capture that is by investing in large, fabulous companies that have done really well in the last cycle. They tend to end up at the top of benchmarks and dominate, like, say, the Mag 7 does in the S&P 500. And in India, it's no different. One of the reasons we set up the India 2030 Fund is we feel there's substantial opportunity in companies that are actually going to grow, going to be part of the rising penetration and lead to, substantial return profile relative to those that are perhaps more mature and have already made it.
And are perhaps a little bit more well known. So you mentioned cycle there. Kenneth, I'll go to you for this one. You've invested in India, and I will say that Kenneth is joining us live from India. He's on the ground there. But Kenneth, what makes this sort of moment, I suppose, in India's growth story unique compared to other perhaps past cycles that you've seen?
A number of things have changed over the last 2 decades. Primarily, one thing is inflation, which was a bugbear for India for almost the last 2 decades, is now in line with what the Western world is, which effectively means our cost of capital, which was a disadvantage for corporate India or for India itself, is no longer a disadvantage. I think that's a big realignment that has happened over the course of the decade, and we are just placed at a point in time wherein corporates have all the cash they require on their balance sheets. A lot of Indian companies are now free cash positive, and they have a lot of cash on their balance sheet, and now they've started putting it to work. You got a domestic opportunity which is reasonably large. We're just about 3.5 to 4% of the global GDP, but we are at about 20% of the world population, or a little over 20% of the world population. Now put capital and put human capital. And we could transition this growth rates a little higher than what we've done in the past. So that's where the inflection point lies at this point in time.
Got it. Maganthan, the fund is focused on 15 to 20 high conviction stocks across 3 to 5 themes. Mm-hmm. Correct me if I'm wrong, but I think that's what I've done my research. So how do you decide which themes are worth backing for the next decade?
Yeah, so this fund is a partnership between India Avenue and Old Bridge. And Old Bridge's investment process as the advisor of the fund essentially relies upon a business cycle. So identifying which industries are going through consolidation and selecting the largest player in that industry or the second largest player as that will thrive when the industry turns towards a more successful pathway. So when identifying the themes, you're not trying to identify themes with all the same horizon at the same point. You're trying to identify different industries in different stage of development, and you're trying to look at what is going to be successful going forward that I can buy at a decent valuation today.
Mm-hmm. Kenneth, you advise, as Maganthan has pointed out, the fund on stock picking within some of the key themes, so from the ground there. What's your process when it comes to identifying businesses that can deliver alpha in such a fast-growing market?
Growth is intrinsic, and like Maganthan actually put it together, we like to look at a business cycle. We like to look at a business cycle which is now stabilizing. When a business cycle actually stabilizes, and most of it is on the downside, you also get valuations which are almost perfect, which is closer to price to book rather than price to equity. And when you're essentially buying a company or a business at uh, at 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 replacement cost, or at its book value, you almost protected your capital. You almost protected your capital, and then you just have to have the patience, because the India growth, or per capita GDP growth, or GDP growth by itself, there's an underlying growth process to it all. So we just try and get our stock pricing right, as well, and then just wait for the cycle to essentially emerge. One fundamental attribute to the fund is, we run a very high active share, uh, and with the high active share, we're able to drive the process towards a very consolidated portfolio, and at multiple periods of time, you've got very different industries, or very different industries going through different business cycles together. Uh, I think it's valuations. Large companies are companies that dominate their entire industry. No financial risk. That means they have the capital to withstand any down cycle if it still continues, and then patience. Uh, and patience is essentially when that cycle emerges.
So, Kenneth, while we've got you, let's dive into manufacturing and exports, one of your key themes. Can you just give us the insight as to why India is well positioned here, and perhaps back it up with one of your stock picks in that space?
Well, it's all about human capital, right? And any economy that's emerged over the last decade or the last century, any country that has emerged has always backed it up with human capital, and they've always gone out to get a higher part of global GDP. Uh, we are not doing anything different. As a country, we're not doing anything different. We've emerged as one of the largest IT service providers globally. We've got some great IT service businesses everywhere in the world. There's a reverse migration of GCCs, or cost centers coming into India, and that's creating the employment cycle out there. So we dominate the services space. The emergence of Indian pharmaceuticals. Now you go to any part of the world, whether it's the US, whether it's Europe, or whether I mean, just any part of the world. And in the top 10 companies out there, and this is in generic pharmaceuticals, you will have at least 5 companies who dominate that space. So what we've got with Indian pharmaceuticals is we are competitive. We've got we can do research uh, at a cost which delivers high ROEs to the underlying business, and we've also got reasonably high market share out there. So when you put this three together, I think that that they become globally competitive, and they continue to exhaust. They continue to take market share, and then there's a big opportunity that exists. I mean, close to $700 billion of drugs are going out of patent over the next decade, and that's the growth market that's sitting out there. We're also doing our bit in automotive. Uh, globe amongst Within the entire world, we are one of the few places which have the entire supply chain which is indigenous. Okay, we got the entire supply chain which is indigenous, and we are extremely cost competitive as far as the small cars and the bikes or the two are concerned. Uh, that's another opportunity which is large, it's scalable, and all of this goes down to manufacturing. It's got to do with processes, it's got to do with technology, and most importantly, it's got to do with human and financial capital. We seem to have put the pieces together today to grow a global franchise around all of this.
Okay, fascinating. There's a lot to unpack there. We had a chart up of Markson's Pharma. So that is a name, Mugunthan, that we wouldn't know here at all, right?
Yeah. That's not in the top 200 companies in India. Yet it does supply to companies like Woolworths, Coles, Aldi, has a presence
I was
in
going to ask if we would have used some of their products.
Yeah. So simple ibuprofen type products that they supply to. And, one of the stories is scalability, economics, the cheapness that they can provide these medicines is unmatchable.
Another theme I know that you're focused on is urban consumption. So I suppose how important is something like property in India to meet the changing demographics, and how would you sort of look to leverage that thematic?
Yeah, so look, real estate went through a difficult period in the last decade, say between since the GFC all the way to 2020. We saw therefore lots of players that were more marginalized out, and we saw post-COVID a lot of the IT professionals in particular receiving much larger wages than what they had been, and identified that perhaps the south of India was where most of these IT professionals lived, and one of the consumption areas that they could focus on was real estate. So, this is typical of the old bridge process that Kenneth highlighted, that you look for an industry that's going through a difficult time but likely to emerge, and you partner with one of the larger firms that has a successful track record. So you're not investing with small cap, unprofitable, turnaround type stories. It's just the industry has a substantial way to grow, and you're trying to fit in at the top of the pie there in the penetration story as it grows.
So I know that a company called Brigade Enterprises is in the portfolio. What exactly does that do? How does that play to those sort of thematics?
That's a real estate developer that's based in the south of India in Bangalore, where perhaps a lot of IT professionals are situated.
Okay.
Yeah, so it's part of that thematic. We bought that stock as part of the portfolio in 2022, and played that story of the real estate, improving scenario as people had more wealth that they were able to expend in these areas. And we think going forward that might play into other areas like QSR restaurants.
Right.
You can talk about the automobile story, which is also, India has a fascination with SUVs. All of a sudden starting to spend money on more discretionary items rather than purely staples.
Fascinating. And Kenneth, aviation has also been a standout in India as well. What gives you confidence that that will continue? I suppose in your holding in particular, which I believe is, part of your thematic. How does, I guess it's supposed also reflect that rising wealth and demographic changes that are going through?
It's a little of both. I think it's simply a great execution by a company in a very bad business. Not too many companies go on from India to become the largest in their category globally, and this aviation company, which is Interglobe, has actually done it. Now the category that we actually look at consolidated through the last decade. It came through the pandemic with just one company solvent and every other business which is not solvent. Or every other business that was bankrupt. The advantage of this business is now it's got a 55% market share. It knows most customers or all customers that have ever taken a flight out of in the last decade. It knows every customer that's taken a flight out in the last decade. It's got the most amount of connections domestically. Now with this kind of data, it also has the most amount of data of customers navigating their way to the international market, or whether it's tourism, whether it's business trips. And this is where the next level of growth actually comes from. This business now addresses Indians going outbound. And the entire incremental fleet that is being put up by Interglobe is coming in the international market. How significant is this company, both in the domestic landscape and the international landscape? Interglobe over the next 10 years accounts for Airbus's 13% of Airbus's order book, whether it's narrow body fleet or whether it's the long range and the wide bodies. It accounts for 13% of Airbus's order book. Now, this is where the company is currently positioned. It's got about $4 billion of cash on its balance sheet. It's primed to continue to build out cash through this entire cycle, and it continues to consolidate the market. So the last couple of years has been great. It's funded its balance sheet. It's taking it to the next level, and like real estate, like the QSRs, it addresses India's rising per capita disposable income, and that's where we see a massive opportunity really emerging. Domestic airline, fairly well consolidated domestically, protected by regulations in the domestic market, and extremely competitive as far as outbound traffic is concerned. So that's how we put it together. We're very optimistic that he'll be able to deliver over the next couple of years and continue the trend of how this business generates cash flows into the future.
Kenneth, it's fascinating. McGovern is fascinating. These companies that are so massive, have such a lot of data, playing to these real strong thematics that we've never heard of here. But many investors do worry about volatility when it comes to emerging markets. What's your approach in managing risk when it comes to these high growth companies in India?
You've got to have industry diversity. You've got to understand that there's stock specific issues, like when you've got a maximum of 20 stocks. Obviously, you don't want to take too much exposure in one industry or one company. But I think anyone who's investing in India will have to understand that it's a specific region. There will be certain nuances that pop up maybe month or quarterly or even yearly. But what we've seen when we look at the history of Indian equity market returns is if you've been a holder, the compounding earning story tends to play out. And that is your risk reducer. India doesn't have one big industry that dominates the index. It's not a Brazil with energy and iron ore. It's not a South Africa. It's not a Taiwan. It has the largest industry in India is about 29%, which is financials. So it doesn't have a history of volatile earnings. It has volatile prices because foreigners have gone in and out playing underweight, overweight in their emerging market or Asia fund. But even that is reducing now because locals have become such a big investor in their own market.
Fascinating. And when it comes to, I suppose, having boots on the ground, I don't want to sell your own story, but it must help having somebody like Kenneth there inherently understanding what's happening.
This is a key point. When people say, okay, it's a great growth story, but I'm scared about the governance and volatility, I don't really know, let me stick to the large caps or do it passively. For us, it absolutely makes sense to have an expert who's been working Indian markets for 25, 30 years, understands families, founders, how they think, what's their attention to minority shareholders, whether he would allocate money to those companies based on his history and understanding of how these people have operated in those markets. So for us, that's far more satisfying than saying, okay, we are allocating according to a benchmark or just going where momentum has gone. So that absolutely is the whole crux of investing in funds like this. It's the alpha, the outperformance that you can achieve from partnering with people who are experts.
Just because we're almost out of time, I could keep talking forever. Kenneth, and I'll put you on notice because I'm going to ask you the same thing. For Australian investors looking to benefit from India's growth story, and I know you know Australian investors because you've been here yourself many times, what is the one message that you would leave them with about the opportunity in India for the next decade?
Look, we're starting off at this point with about approximately $3,000 per capita income. Uh, there is no solvency risk, both from a country metric as well as a corporate metric. We can debate valuations, but in the past, India has been at these valuations and always come back and surpassed them over history. For the last 3 years, and that's the limited time that we've had with the 2030 fund in India, we've generated approximately the 30% CAGR with an alpha over the index of almost double the alpha over the index. And in our careers, and I'm amongst the other few that have been around for the last 20 years plus, the alpha generated over the indices have been over 10%. Okay, and this is over the last 20 years, and it's not a very short horizon that we're looking at. So there will be volatility, like Mukundan's put on the table. It is a fairly concentrated product, but in the long term, as long as you have this, have the world's largest or second largest population tearing up in per capita income, there is multiple number of industries that are there which will grow large, and a number of other industries which will start getting incubated and coming to the public markets. And all of these companies, and someday some of these companies are going to be the largest in the world by market capitalizations.
You want to get in at the ground up with some of these companies, or what is the most compelling reasons for Australian investors to get into India?
Look, for me, it's just a simple demographic story. If you look around the Western world, the average age is over 40. Right? We've seen the action replay of China, Japan before that, Korea, where you go through that spurt where you have a large component of employable population. It's India's turn now. With an average age of 29, by the end of the decade, almost 25% of the global workforce will reside in India. So that demographic itself means you have to have some exposure. You have to be patient because it will come with the compounding story. But I think most people are underallocated to this story, which is essentially going to be a US times 5 from a consumption perspective, because there's 5 times as many people and you've got a low GDP per capita base, which even if that goes to 5,000 or 6,000, that's doubling from here. That's like Australia going, increasing its capacity to consume by 2x of what it is today.